Good afternoon and good morning for those from across the seas. Here we are with a new edition of ETMarkets Global Summit. This is the fourth edition. ETMGS has evolved a lot over the years to become the much sought after platform for India-focused investors and money managers to share their wisdom gathered through the year. Just to tell you how much ETMGS has become a part of Dalal Street amid the COVID crisis when there is no sign of the event this November. You all know it takes place in Mumbai on the last Friday of November every year. In a regular interactions with Dallas Street people, many would ask me if COVID-19 killed ETMGS. Glad to tell you, no, it didn't. Here we are. So four things, new things happening this time. One is, of course, we have gone virtual. Two, you won't find journalists moderating every session. Instead, we are trying to facilitate more discussion among industry leaders, mostly across generations. Three, many of the faces you often see on the talking side will appear on the other side to ask questions this year. And four, we have plenty of wonderful and wise women speakers this year. In one session, we will have India's youngest female equity fund managers talking to one of the industry veterans. That roughly tells you about our continuous efforts to make it different and more engaging. We hope there will be plenty for you to take home from this. On that note, I invite my colleague Deepak Ajwani, the captain of the ship at ET Digital, to kick it off. Over to you, Deepak.
Thanks, Bijoy. Welcome to the fourth edition of the ETMarkets Global Summit. As much as we would like to have made this event possible in Mumbai, as we always do, COVID has made a lot of changes in our lives and the way we conduct ourselves. So here it is, not just a one-day event, but a three-day event for you, all held virtually from the safety and comfort of your home. But we haven't compromised on the best speaker lineup that we ever get for you. So today we kick off the day one of the three-day summit with a special focus and a stellar lineup that includes Dr. K.V. Kamath, Sangeeta Reddy, Swaminathan Iyer, and many more surprises that are in store for you. So sit back, relax, be safe, but enjoy this cerebral discussion, the ETMarkets Global Summit 4.0.
Okay, that was a very crispy start, I would say. Thank you so much, Deepak. Our first session brings in a doyen. I don't think anyone attending this session would need any introduction for Jim Rogers. He's often referred to as the global guru on commodities. I would assume that came from his famous book, Hot Commodities, How Anyone Can Invest Profitably in the World's Best Market. He's also the creator of Rogers International Commodities Index. Jim is an investor, financial commentator, author. Among his much acclaimed books are Street Smart, Adventures on the Road and in the Markets, A Bull in China, Adventure Capitalist, The Ultimate Road Trip, and others. He was the co-founder of the Quantum Fund and Soros Fund Management. Currently, he's the chairman of Bill and Interests and is based out of Singapore. On the other side of the table, we have one of Dalal Street's most erudite and amazingly articulate Shiv Sehgal. He's also dashingly young. Shiv is the president and co-head of Institutional Clients Group at Edelweiss Global Investment Advisors. Take it away, Shiv.
Thanks, Bijoy. Thanks for the kind introduction. And Jim, lovely seeing you. I think for the benefit of audience, if people don't know, prior to Edelweiss, my prior background has also been in emerging long-short funds, and I've been based in Sydney and Singapore. And I had the privilege of meeting Jim a few years back. And while Bijoy was very kind in our introduction, I think one thing he missed, and what I've always kind of held special for Jim, is that he has such a long time horizon, which very few in the investment world have. And he sticks to his framework. He knows how he invests. And he's articulated his thought process very well throughout the years. And we're going to be talking to Jim about a variety of things, the current investment world thing he's worried about, where he sees opportunities where others don't, and especially how he sees the decade ahead for emerging markets in India in particular. So, Jim, welcome to the show and thanks for your time. 2020 has been a black swan in the real sense of the term. A pandemic followed by unprecedented lockdowns throughout the world. India in particular was shut down for a couple of weeks, if not months, and which basically brought economic activity to a halt. And that has led to a never seen before stimulus. You have always had a strong view on the subject of trillions pumped by central banks. I think many erudite followers have heard your thoughts. And it seems that the Fed is no rush to kind of tighten policy. Everything that is coming out of them, it seems that quantitative easing probably won't be tapered until at least Q4 of 2021. And zero interest policy is likely to stay in place till almost 2023 is from what we are hearing from the Fed. So we would love to hear your thoughts and kick off the session by seeing how you see the global economy currently shaping up in the new normal as things get back to status quo. And which pockets of the economy do you think could significantly upside from here, and which ones would you be avoiding, at least in the near term? Let's kick off with that.
Well, I'm delighted to be here, Shiv. I'm a big fan of ET, as you know. Those are good questions, but I've been back to your introduction for a minute. I make a lot of mistakes, Shiv. Don't think I don't make plenty of mistakes. I do. We can talk about my mistakes if you want to. But as far as 2021, most of the world economy is going to be getting better. It already is getting better. But Shiv, that's because last spring, everything stopped. I live in Singapore. The airport closed. So now if you have 50 flights a day, you think it's great. It's a lot better than it was when it was closed, but it's not nearly back to what it was. It is going that way. So for a while, everywhere in the world, things will be getting better just because they went to nothing. And because governments everywhere are borrowing and spending and printing huge amounts of money. So all of this money printing and spending is going into the economy, going into markets. And so for a while, things are going to be good. We even have some bubbles developing in some parts of the world.
Absolutely. And do you think, I was going to ask this question a bit later, but since you've touched on bubbles, do you think that current valuations, what's happening in the top 5 tech stocks in the S&Ps and the contribution that the large caps are making into this asset class bubble, do you view that as a bubble just yet? I mean, you've lived through these periods, over the last 30, 40 years, and would be just kind of to see which kind of bubbles you see forming at the moment. I mean, it's kind of pretty much, we have seen the same movie play out in different scenarios. And do you see that the tech is one of them at the moment, or do you think that it's actually changed for the better, and the disruption that the tech world has provided, it's here to stay?
Well, yes, Shiv, I've been to this movie. I know how it's going to end. What you have now is bubbles developing in some sectors of the markets. I mean, things like Apple never go down, 10 in China, Samsung in Korea. I mean, right now you have thousands, tens of thousands of young Koreans pouring into the market and buying Samsung every day because they think it can never go down. And 10 cents. Now, I've seen this before. You have a lot of new people coming into a market when there's a lot of free money and they don't know much about what they're doing, but they know a few names. They buy them and they go up and they tell their friends, and everybody else jumps in. It's happening in some sectors of the markets around the world, and it hasn't spread to everything yet. So I know that I think I know the bubble is not complete yet. It's got a ways to go to be a full bubble. And when it's a full bubble, it will pop. A lot of people will lose a lot of money. I hope you and I don't lose a lot of money when the bubble pops. But if you look around for now, I mean, bonds are certainly in a bubble. Bonds have never been this high in the history of the world. Yeah. Never in world history have bonds been expensive. Some parts of, back to Korea, in Seoul, the property market's a huge bubble. In some parts of the world, you see property in a bubble. So it's happening, but it hasn't spread to everywhere yet.
Fair enough. So, Jim, when I speak to at least the bullish camp, I think the three pillars that kind of emerge in the bullish camp are that, we have strong earnings, we have massive stimulus, and of course, the vaccine progress, has probably, and all three proponents are not only still in place, but are getting stronger day by day. However, the risk of one of the three pillars, the risk to the markets is not that one of these three pillars crumble, but instead that yields climb to such an extent that undermines this part of the PE expansion that we have seen in 2020 in markets all over. So as the battle against the pandemic is won and fiscal stimulus numbers surge, yields are bound to rise, and we have been seeing that in pockets in developed markets already taking place. And you've had a very independent view for a long time and been bearish in parts on the US dollar. And would be love to hear your thoughts, given this current backdrop, that do you think that the dollar's near-term and longer-term views or the theme is related to how yields play out? Or do you see that the dollar is now, given the stimulus, in a structural downtrend because it has massive implications on EMs?
Well, I own a lot of US dollars at the moment, Shiv. The US is the largest debtor nation in the history of the world, and it's getting worse every day. So you probably should say, well, why do you own US dollars? I own them because, we're going to have more problems, turmoil in the world later this year or next year. During times like that, people always look for a safe haven. They think the US dollar is a safe haven. It's not, but they think it is for historic reasons. So the US dollar will go much higher. It might even turn into a bubble itself. It'll certainly get overpriced, at which point I'll have to sell my US dollars here, because if it's a bubble, especially, you always have to sell a bubble. But there are many countries and many people now looking for a competitor for the US dollar for both political and economic reasons. People know they have to find something to compete with the US dollar. So I can see that the future, the US dollar is coming to an end. It's been the main currency for, well, not 100 years yet, but for 75 or 80 years yet, which is a long time in the history of currency. So I own it, but I'm assuming the end is coming sometime in the foreseeable future.
So I guess that would lead to my next question, is that, a lot of people debate whether it's the euro or the Chinese renminbi or the yuan, or, which currency currently can actually be the next world reserve currency. Do you have any thoughts there?
Well, I don't see that it can be the euro, because there are too many people in Europe who want to get out of the euro. And when things get bad, they'll blame problems on the euro. I would suspect it's the renminbi, the Chinese currency, but Shiv, right now, the renminbi is not even a convertible currency. It's a blocked currency, so it's absurd. By the way, I own some renminbi, but so it's absurd to say that the renminbi can be the world's reserve currency, but China has been opening it up since 2005, too slowly, if you ask me. But if and when the renminbi is completely convertible, it's the only currency I can see on the horizon to compete with the US dollar.
Fair enough. So, Jim, let me just kind of reiterate. I think I heard you a while back, and you had mentioned a comment that, if you were smart in the 19th century, you would make your way to London. If you were smart in the 20th century, you would make your way to New York. And, and rightly said, in the 21st century, you've been a big proponent of Asia, and you live in Singapore, and you're a big believer of the Asia story. And in that context, I would like to ask you that, how do you view the Indian economy, given the last few years? India has actually gone through a lot of big structural moves. We've had the GST, the RERA, the IBC, a lot of initiatives that the government has undergone. And how big do you view the Indian opportunity within the context of other Asia markets at the moment?
Well, back to India to start there just quickly. Mr. Moody has not done as many of the things I thought he would do. He has not been a big a reformer in India as I hoped. He certainly changed the tax, the GST, and that was brilliant. And who thought it could ever happen? But he did it. We think he did it. It looks like he did it. So that is great. But I wish India, I wish all of Asia, but especially India would open up more, because if you made it an open economy for trading and investing, India would have a much greater future. So that's my main complaint with Mr. Moody. But other Asian economies, certainly China, I've been buying Chinese shares, Japanese shares. I'm optimistic about the future of Korea when the 38th parallel opens up. There's still certainly more opportunities in Asia than there are in the West. And if Mr. Moody or somebody ever opens your markets, oh my, wouldn't India be very exciting?
Absolutely. No, you hit the nail on the head. Jim, one more kind of topic that I want to touch on. The Indian rural economy and the sector has demonstrated very strong resilience in the last couple of months. And agriculture being a backbone for our economy, has a domino effect on the overall well-being of, almost 70% of the population. You have been a big bull on agriculture in the historic past. Would love to hear your current thoughts on the key trends to watch out in this space, and how you're seeing probably some pockets elsewhere in the global markets as well in terms of agriculture. It's been in a downtrend for a while, so please.
Well, sure. Yes, I'm optimistic about agriculture. It's been terrible for a long time, and now it's getting better. Land prices in the U.S. are going up strongly. India has a long history. At times, you've been one of the world's great agricultural nations. You've got the soil, you've got the weather, you've got the people, you've got the brains. Unfortunately, at the moment, agriculture is so regulated, so controlled, so distorted by the government. The government says they're helping people. Oh my gosh, Shiv, it's very dangerous when the government says they're coming to help you. When the government comes to help you, you should leave home. Go away. You don't want help from the government. But India should be and could be and will be a great agricultural nation again someday, if the government would just get out of the way and leave all those smart farmers to do it. I am optimistic about that in China. The Chinese say in the past 40 years, the people in the city have done well, but the people in the countryside have not done so well. So now Beijing will do anything you want to help you if you're in the countryside, including if you start businesses in the countryside, because they want this countryside to catch up now. I'm optimistic about agriculture, but especially in China, where the government will do everything they can to help you. Russia, Russia too. You read Russian history, it's like reading Indian history. At times, the Russian farmers have been unbelievably successful and rich. Now, I'm more optimistic about Russia than some countries because Mr. Trump put sanctions on Russia. And so Russian farmers every day wake up and say, oh, thank you, Mr. Trump. Thank you, Mr. Trump, because now they're protected. So Russian agriculture is booming again. And they too have soil and weather and people. So especially in places like China and Russia, I'm optimistic about agriculture, but nearly everywhere.
Fair enough. And Jim, last 3-4 months, this whole reflation theme has picked up in the world, and there is also an element of supply disruption that happened in 2020. So do you think as the pandemic subsides and the economic activity normalizes, do you feel that the outperformance of metals will continue?
Wait, say it again.
Do you feel the outperformance of metals will continue in commodities?
As I look around the world, Shiv, bonds are in a bubble, so they're very expensive. Many stock markets are becoming very expensive. Property in some cities, as we discussed before, the cheapest asset class I can see worldwide is commodities now. I mean, silver's down 50% from its all-time high. Sugar's down, here's silver, sugar's down 70 or 80% from its all-time high. Most commodities are still very cheap on a historic basis, certainly compared to Apple or compared to government bonds or things like that. So the cheapest asset class I see is commodities, especially agricultural commodities.
Perfect. And Indians are very enthusiastic about gold. I mean, I know you at the moment you love silver more than gold, but do you think you're long-term as bullish as on gold as you have been in the past?
I have a little gold here too, Shiv. Don't worry. I'm not buying either of them at the moment. I'm waiting for the correction. I don't know how long this correction will last, a month, a year. I have no idea. I will buy more of both. I will buy more of silver, as you point out, because it is cheaper right now. It's down 50%. Gold is down 10% or something. So I will buy a lot of silver and gold sometime later, because before this is over, Shiv, gold and silver are going to go much, much higher, because people always, when they lose confidence in governments or money, they always buy gold and silver. I'm an old peasant. Politicians say you don't need gold. The Indian politicians especially say, get rid of the gold. You don't need gold. American politicians, academics. But I'm an old peasant, and us old peasants know when things are bad, we want some gold and silver in the closet. We want some gold and silver under the bed. So I'm an old peasant, and I'm going to buy more in gold and silver no matter what the politicians say. And if India can somehow figure out a way to make people sell their gold and make the temple sell their gold, and it goes down, some of us old peasants are going to buy a lot of it.
Wonderful. Jim, I've been waiting to ask you this question on the new age gold, which the fintech world has started talking about. And, Bitcoin has had a phenomenal kind of rally in 2020. Do you own any Bitcoin is probably the one question. And do you believe in that story, or would you believe in it at some stage is the only question I have on that cryptocurrency.
Well, Shiv, I wish I owned Bitcoin. Of course, it's gone through the roof. A lot of people I know have done very well and are doing very well in Bitcoin. I have never bought any cryptocurrency. I will point out that many cryptocurrencies have already disappeared and gone to zero. Bitcoin was not the only one. There were hundreds of them at one time. Bitcoin has been a great success in the markets anyway. My view is that well, first of all, let me go back. Money is going to be on the computer. It already is on the computer in China. In China, you can't take a taxi with money. You have to have your computer money. You can't buy ice cream with money in China. You have to have it on your computer money. So it's going to be on the computer. It already is in some places. That will happen. But it's going to be government money. If Bitcoin or other cryptos are ever successful as money, governments are going to outlaw it. I mean, governments do not want to lose their monopoly. They never have. They do not want to lose their control. Now, I mean, I hate it. I hate the government to have even more control, but unfortunately, they do. The Bitcoin guys say, listen, Jim, we're smarter than the government. And of course they are, Shiv. But the government's got the guns, the government's got the tanks. And if the government makes it illegal, most of us will stop using it. So I can certainly see it. It's a great trading vehicle. It has been anyway. But if it becomes successful as money, governments will step in.
Fair enough. I completely agree on that view as well. So, Jim, I mean, I also wanted to ask you, as Korea, India, the retail space has actually been growing tremendously. There's a lot of retail and new people are coming into the Indian markets as well. And I'm sure there are a lot of young people out here listening to your advice today as well. What is the one advice you would like to give on personal finance and investing, given your plethora of experience, something, just the one piece of advice that you would want to disseminate as a guidance?
Yeah, watch ET. What do you mean? One piece of investment advice. Watch ET, read the newspaper. I mean, for goodness sakes. After you watch ET and learn from them, the next part is only invest in what you yourself know a lot about. Everybody watching this knows a lot about something, whether it's fashion or cars or sports. Only invest in what you know. Do not listen to hot tips. Do not listen to me. The last thing you want is some guy you saw on the internet telling you to buy Russian shipping. Well, if you don't know anything about Russian shipping, don't think about buying Russian shipping. But when you stay with what you know, that's how you get rich. Now, Shiv, everybody wants a hot tip. Oh, just one hot tip, just one. Forget it. Hot tips will bankrupt you. Hot tips will ruin you. If you stay with what you know, of course, many times you'll do nothing. But if you wait until you see something that you know a lot about, that's how you become successful. Now, Shiv, nobody wants, that's boring, boring, boring. No, we want a hot tip. We want a hot tip. The way to be successful as an investor is to do nothing until you yourself find something that you know is going to work. You do some research and then you buy. And by the way, if you find one, send me an email too. I'll look it up. I'll do some research myself. But that's how you get rich. Whether you're young, old, no matter who you are, if you want to be successful in the investing world, that's what, don't listen to hot tips, listen to your own knowledge.
So, Jim, here's another question for you, on investing. A lot of people ask me this question, like, how do you build conviction on an idea? Once you've done you've done the hard research, you think you have a good viewpoint on it. Do you, in your investing career, what has worked for you? I mean, have you gone full guns blazing once you have conviction, or do you kind of, tip your toe in and see, whether you've got the direction right, or is the momentum behind you? What has worked for you, and what kind of advice was you given on that perspective?
Well, first, Shiv, I know that I'm very bad at market timing. I may be the worst market timer in the world, probably am in the world. So I know I'm not any good at that. I don't try to do short-term trading. Try to find things that I think are right. And then I have learned that I better wait because my timing is so bad. So I wait for a while. My timing is still bad. Don't think I'm any better at it, but I wait and then I start buying. And I buy gradually and slowly. I don't pile in all at once, because usually it goes down after I start buying, but then eventually it comes along and I have a lot more. And if it works, it usually gets bigger and bigger. And the way I like to do it, I like to do nothing. Many successful investors do nothing most of the time. They wait until they find something good. And then once they buy it, they just wait for it to develop and grow. And, hopefully, if you get it right, years later, you might sell it. So that's my way. I like to do nothing. I like to do nothing and wait. And then I like to, once I own it, after I've accumulated it for a while, then I like to wait and do nothing. And hopefully it goes up a lot.
Wonderful. In the paucity of time, I wish this was an hour or a 2-hour interview. But, for everyone listening, and I just want to let everyone know, I think Jim is probably the most traveled person who will get onto this forum or ever will be on any forum. And, you hold the Guinness record for covering 116 countries by road. I would love to hear one anecdote, or a memorable incident from, that experience that you can relate to everyone, or anything, anything that came out of from that experience. It's not that usual that we have such plethora of different adventures come on, or at least I speak to people on that regard.
Yeah, I make a lot of, you want to hear about my first wife? What a mistake that was. Huge mistake. Oh my, unbelievable. I make a lot of mistakes in my life. We could have a whole day about mistakes I have made. We'll start with my first wife and they go on and on and on. That was a big one. But I've made many in the market too. And some of them are a market like Bitcoin. I never bought any Bitcoin.
Yeah.
Well, I wish I had.
Fair enough. Well, Jim, you truly are one of the most independent minds in the investment world today. And, not just in investment choices, but also in your life choices as well. And, we thank you for your time. I really wish this was a far longer conversation than it was. And, I wish you a wonderful day, and thanks for everyone for listening in. And I'll move it back to Bijoy for, moving on with the session. Thank you, Jim. It was a pleasure.
Thank you.
Thank you. Thank you, Jim. Thank you. It was as usual, always fun here listening to you. So, Shiv, dollar is in the doldrums, but hold it as long as people believe it is a safe haven. Then Bitcoin has no future. Modi has a lot of reforms to do. Buy gold and silver when they correct, right? My takeaways.
Well, you can also buy agriculture.
I can also buy agriculture. Yes, wonderful. Thank you so much. Thank you so much. We hope to connect with you again, Jim. and have a good life.
I certainly hope we can do it again. I'm a big
Yes.
fan. So everybody, please watch ET.
Yes, and do read ET and ETMarkets. Thank you so much. Thank you,
Thank you.
Shiv. Thank you for
Thank
doing
you.
this. Sincere gratitude.
Bye-bye.
Thank you.
Most welcome. Thank you. Bye.
Okay, moving on. The next session brings in a very familiar face, actually, but we haven't been getting to hear him too much in recent times. If I may introduce him in one line, anyone writing a book on modern India's economic history would find it difficult to avoid his name. I'll not take much time here for the introduction. Instead, I would hand over to Sunil Sanghai, founder and CEO of Nova Dhruva Capital, to do the honors. Over to you, Sunil. Sunil, we have you with us. Here is Mr. K.V. Kamath. Sunil? Hi, Sunil. Hi, Sunil. Can you hear us?
I'm just trying. I think okay. Now I'm here.
You are on, Sunil. Yeah. Yeah, working fine. Yeah, Sunil. Actually, what I have done is that I have given it over to you to do the honors of introducing Mr. Kamath. I'm sure I said it's just one line. I said anyone writing a book on modern India's economic history would find it difficult to avoid his name. So I leave the rest to you. You do the honors.
Thank you.
Fantastic. Thank you, Vijay. Thank you very much. Thank you for inviting me, and ET and ETMarkets. Thank you for hosting this conference. This is absolutely a fantastic conference. I was listening to a couple of earlier sessions. It's really very informative. I have the honor and pleasure of welcoming and hosting Mr. K.V. Kamath. I call him a visionary banker, and it fits in very well with the topic which we have as we reset Indian economy as we come out of the pandemic, visualizing the next 5 years. And we couldn't have had a better person than Mr. Kamath really talking on that. Why do I say visionary banker rather than doing a normal introduction? I do want to share a couple of my own experiences with him as anecdote. This was in 1996 when Mr. Kamath came back to ICICI, which people were eagerly awaiting that moment. And first thing at that point of time, you imagine a situation in 96, you had development financial institutions like IDBI, ICICI, IFCI, and he came back and said, look, he wants to focus on retail. And we were wondering why focus on retail? And that's the vision that DFI is going to get converted into retail. You saw what happened with ICICI Bank and with some others. The second anecdote which I wanted to cite is this was 1999. Mr. Kamath always believed in technology. At that time in 99, we had 2 ATMs in the city of Bombay. One, if I remember correctly, was of Citibank and one HSBC. And at that time, he said he wants to introduce ATM by an Indian bank, and the rest is history. We've seen how the technology has just overtaken the banking and the banking sector. And similarly, when it came to lending, most of the banks and the development financial institutions, they were focused on corporate lending. And he brought in the culture of retail lending through mortgage and the credit card and all of that. And now we see how the whole Indian economy has changed. So, Mr. Kamath, we really remember all those. And therefore, when we talked about the next 5 years, we thought, who other than you? And as Vijay mentioned, obviously, there are a lot of things which we can keep talking about this. Apart from that, Mr. Kamath more recently has been CEO of New Development Bank till recently, which is popularly known as BRICS Bank, also non-executive chairman of Infosys, the second largest technology company in the country, the boards of multiple global corporates. But most importantly, he's been a strategist, advisor, and mentor to not only corporate India, but also to the government. Whenever a difficult situation comes up, people knock at his door. Recently, Reserve Bank of India uh, um, uh, knocked at his door for setting up uh, NPA framework post-pandemic. So we are here, Mr. Kamath, to hear your views for the next 5 years. Uh, why don't I start with one simple perspective, which is as we look at next 5 years, and particularly resetting the economy as it comes out of the pandemic, uh, investment becomes the most important. Government has announced a very interesting policy called Atmanirbhar Bharat. It's a whole package, and where there's a big focus on investment. What is your view of some of the schemes which are being rolled out, like PLI and all of that? Weave that into with your vision of currency which is stable, interest rates which are low. That is a big impetus to the for the growth. How do you see that panning out in the next couple of years, in the 5 years?
Thank you, Sunil. You're very kind in your introduction. Let me put things in context. A year back or so, March to be exact, we were in shock. We did not think that the shock would wear off pretty quickly. Things have worn off for the better, and we are sitting today in a much more comfortable position than any one of us could have imagined. In fact, I would dare say that in several areas we are in a better position than where we were coming into this crisis. Just look at early numbers from Q3. And I was just tracking the numbers, 110 or so companies that have reported, and I find PAT is up 30 to 35%. The same previous quarter. For a much larger sample, it was up about 25%. What I'm trying to say is that India has come back at speed. And something very important has happened, which in a way segues into Atmanirbharata. Talking to Indian industry leaders, I understand now that they have worked, let us say, on the shop floor with just 75% of the staff they would normally have. And they have found out something interesting. They can continue to work with this improved efficiency levels going forward. Yes, we may have to reskill and redeploy the people, but productivity gains, which otherwise would have taken us, 10 years, 15 years, and a large investment requirement have been brought about by a change in mindset. So this pandemic has, in a way, turned out to be good because it has allowed us to, I would say, squeeze out productivity gains at the shop floor and indeed in the white collar environment. White collar was very easy to see, but I never expected that it would happen at the shop floor level. Now, this plays into Atmanirbharata because imagine if you have a 25% productivity jump, you are world beaters. You are world beaters in terms of your production efficiency. Now, what you need to make sure is that you have to go up the quality equation. There again, I think in the last 15 years, India has gone pretty high up the quality equation. That can be ratcheted up. But to support this, you require two things, and you briefly mentioned them. Right on interest rate environment and a right exchange rate environment. Because we're not looking at a one-year flash in the pan. We're looking at this as a sustained growth to 5 years and maybe 10 years. I will pick only two, I would say, reference points. Japan in the 60s and 70s and China in the 90s. Japan, when they went into a growth momentum or a growth cycle, the exchange rate was 350 yen to the dollar. And by the time they were at their peak, the exchange rate had dropped to below 100 to the dollar. And interest rates stayed steady. Take China. Both indices have dropped dramatically. If I look at exchange rates, late 90s, 8.5 renminbi to the dollar. Today, 6.5 renminbi to the dollar. Never has it crossed 8.5 during the growth momentum phase. And interest rates, of course, we all know what it is. Borrowers can get money at 5.5 to 6%. The prime is just below 5%. So intuitively, you can figure out that two preconditions to sustained growth are interest rates which are low and exchange rates which are, in a way, attractive and I would say stable. You cannot grow in a situation where exchange rates fluctuate and all the time, moving weaker and weaker. So I would leave this to the experts, the policymakers. But I would think that these are two preconditions in addition to the steps the government has taken to make Atmanirbharata the way forward. I would think that this is going to be a great success, the Atmanirbharata mission, as it were, because it has come at a time when we were ready to do a reset of the mind, and that reset of the mind has, resulted in a whole lot of common good, as it were. One other thing on Atmanirbharata, clearly the incentive scheme around the PLI and other things which will facilitate this, I would look at these as catalysts. But ultimately, we have to make this into an engine which is driving on its own momentum, because it has to last for a very long period of time. It's a great catalyst that has been put into the chemical mix, as it were. And I'm sure we will now aspire to grow at the numbers that the government set, a 5-year number that they've already given. Maybe the government will come out with a 10-year number, which we will all try out and achieve.
Mr. Kamath, just weave this, because this is very interesting equation, and it works. It has worked in the past also, which is low interest rate, stable currency fuels the growth, right? This equation is relevant. But how to maintain, how to get that? Any tips, any inputs? I'm sure you are giving suggestions to the government and the policymakers.
It's my own thoughts, really, Sunil. If you look at interest rates, we need to look at why interest rates are high. The answer is no, because of inflation. And we need to look at what is causing the inflationary challenges, try to address it. But more important, I think we need to at every stage ask a question, is an interest rate increase the right medicine? Or are we giving a medicine which may or may not be relevant at this point in time? Again, if you look at the budget, any budget of a government can be broken into two parts. What is on what I call developmental expenditure, and what is other expenditure of the government. My hypothesis is that developmental expenditure, honestly, in a developing country context, adding it to a deficit needs to be re-examined in today's world. Are these developmental expenditures, can they be met outside the budget through appropriate mechanisms so that you get a true and fair picture of the deficit? Because these are the reasons why you end up keeping the interest rate high. An inflationary fear for various reasons, and then again, as a panacea for inflation when it happens, and so on. I think a whole lot of examination is required as we drive towards these aspirational levels of growth. I picked up interest rate as an example, but very briefly on exchange rates. If you remember, you quoted the time period 99. 99, our exchange rate was around 40 to the dollar. Right up to 2008 or so, it remained at around 40, 41, 42, yeah. Kept going in that range. It actually came down to 38 just before 2008 briefly. And then you allowed it to weaken. Now we need to examine why did it get weaker? And what is it that we might have done right or wrong at that point in time in terms of the exchange rate? And if you remember, from 48 to 52, and then speculators got into the act, they forecast it will be 60. And indeed, it became 60. Then they said 65. It became 65. So we actually lost, in a way, control of the people who were trying to play with the exchange rate. So all these things we need to keep in mind as you look at exchange rates. And countries which have grown at very rapid rates, by that I mean double digit and above for sustained periods of time, I think key things that they control, apart from providing a facilitative environment, were interest rates and exchange rates.
Yeah, I must say, Mr. Kamath, I have known you for the last 25 years. I had a chance to work on some of your transactions in the last 25 years. Every time I talk to you, I get something new. So this time, what you said, that the government accounting is on a cash basis. There is a capital expenditure which can be taken out because the benefit of that comes on a long-term basis. So, and that will then impact the fiscal deficit. Very interesting point. Let me move to something which is very close to you, banking sector. A lot being talked about in the banking sector. A lot is required to happen. I think a lot has happened on the real economy, service sector, but financial services in general, including banking, NPL, the whole fintech and technology impact, the public sector bank, the restructuring of the bank, the requirement of the capital, and all of that. What is your view at the macro level for the banking sector?
You have asked maybe 4 points. Please clue me in if I trip on any of those. But let me start with NPA because that was the first one that you mentioned. On the NPA front, actually, when I looked at the numbers early last year, that is in January of last year, I think I saw a picture where most of the banking sector was already cleaned up. And actually, if you remember, at that point of time, the finger pointing was the banks were not lending. The cleanup had happened. And there was some capital to be brought in by the government. The government brought in that capital for some of the public sector lenders. The private sector is where I think fairly well capitalized. B, in terms of their balance sheets, a cleanup had already been done.
Yeah.
The past 3 years. So we came into the crisis with fairly strong balance sheets and balance sheets which were cleaned up. So there is not much of a residue that had to be addressed during the last 1 year. The anticipation was that the crisis, the pandemic that hit us, would result in completely broken corporate balance sheets and consequently banking balance sheets. That has not happened. So let us not, in a way, overreact. And because I hear this talk, bank capitalization, bank cleanup. Bank cleanup has been done. Handholding might be required, but that's completely different from cleanup. Recapitalization of banks, in a way, has been done. And nothing has been broken in the last 1 year because banks have been prudent. I think Reserve Bank has been extremely prudent and cautious. Banks have continued to make provisions on what they could think could be the things that could slip. But having said that, you look at the anecdotal evidence. Anecdotally, if there were a large number of corporates which required restructuring, there would have been a noise in the marketplace. We are not seeing that noise in the marketplace. In fact, the noise that I hear when I talk to industry and to bankers is corporates are doing well and actually are deleveraging. To start with, if I were to take one index, and that will tell us the story of corporate India by and large. You remember in mid-90s, when we looked at, or late 90s, 3.8:1 was the debt to equity ratio, the total debt to equity ratio. 10 years back, it was around 1.8:1. Now, if you look at the Sensex, the top 50 companies, it is less than 0.5:1, with probably 25 to 30 companies having no debt at all. So there's a sea change in the way corporates have looked at how they should leverage themselves. And indeed, if you now look at it, I was looking at and tracking the 110 companies which have reported numbers, 35% PAT. And clearly this cash is not being thrown around. It is used to deleverage themselves. And hence, a question that arises, who will fund growth going forward? The answer is probably the first time in our economic history, corporates, I think, are generating enough cash to do, I would say, expansion at the margin, brownfield projects, and even greenfield projects. By and large, they're able to do with substantial cash from their books and some supportive debt from outside. This was the other way around in the past. Small cash from the books and large cash from this, which imposed risks. Areas where there was a risk, rightfully identified by the government. For example, in the corporate world, the SMEs. A helping hand was given, and I think that helping hand has worked. It's not to say that as we look at immediate future and the next 5 years, there won't be areas of pain. I think we know where those areas of pain is going to be. They can be seen now, and gentle handholding there is required. And I'm sure between the government, the policymakers, and the banks, that handholding will be left. But I will sum up to say that we are, I think, well on the road to Atmanirbharata. I think all the ground conditions are there. We have an economy recovered, which makes it provides us even more momentum, as it were. And I think the managers, our managers, corporate owners, or the managers are much the wiser for the crisis. And they have understood how to de-risk themselves in going forward. So in fact, I look at the environment with a feel-good atmosphere rather than a negative or an uncertain atmosphere.
And the government ownership of the banks, Mr. Kamath, there's been a lot of discussion around that since some time, actually, whether the government should own so many banks, and if at all, and how should they own, because there is a constant capital requirement and inefficiency and all of that.
That's the call the government has to take as a shareholder. Let me put this in context. I pick up a few I would say context from what Reserve Bank put out in their internal working group. Yeah. There are 2 points there which I think we need to mull over, not debate. That is the point they made about the capital increases that have happened over the last few years between the private sector banks and the public sector banks. Basically, that the rate at which capital has increased in the private sector banks through internal generation and through external access and raising from the market, juxtaposed with what has happened in the public sector, is one point that they made. Second is the way the private sector and the public sector have utilized this capital. Again, pointing to the fact that probably the better utilization is on the private sector side. I think these are pointers in terms of what requires to be done in a large part of the banking system, because I don't think, let me rephrase it, I think public sector is going to be an important part of our banking system. We cannot wish it away, and neither should we. At this point in time, they are 60% of the assets of the system, and a strong public sector is required for us to meet our aspirations of at least the next 5 years growth. And let us see how it evolves as it goes along. But in the interim, the working group gave some pointers. I think these are also interesting pointers which we should look at and let the market decide how this happens. And as that happens, I'm sure the major shareholder of the public sector will take a call on what is the appropriate next step.
We did a small discussion amongst us in terms of what are the areas and the question we should touch upon with you. It's a long list, but there's one particular point which everybody was interested in, given that you've been advisors to a lot of corporates, formally or informally. What is your view on a family-owned corporate versus professionally run? Particularly now, there's a lot of FDI. Private equity buyout firms are buying corporates, and they are, they're managing it with the independent board. So, a professionally managed corporate managed by the professional manager versus the family managed companies. And because we are going through that transition, and you have seen that.
Sunil, this is a very interesting question. I've been thinking through this for quite a few years now, not 25 years, but at least last 5-10 years. See, if I go back to my earlier experience, which, the first 30 years of my experience, 1970, 71 to 2000, basically business was family run. And entrepreneurship came from the family. And you had a few professionals helping the family run business. I would think that the mass, what you call professionals who could run business, that mass started coming of age only post 2000. So our history is really, a very short history of professional management in our country. I would venture to say, let us learn from what happens elsewhere. And in some context, what's happening in our country, and I'll put it in context. You look at a typical startup in the US today. Typical startup is an individual entrepreneurial drive. Yeah. And at a certain stage, when it gets momentum, that entrepreneur and people who have backed him decide that to take it to the next level, you need to bring in, other drivers, as it were, to the fore. And the initial founder takes a backseat. He's still got an equity holding and so on. By and large, that is the model. There could be some who still want to steer it with their own hands for a few more years. That is fine. But if you look at our experience of the last 25 years of wealth creation in the US and the companies which have come up, this is by and large the model that has been run. I would think that is what will happen in India as we go along. We're already seeing that in a lot of family companies. Yeah. The next generation, this could be the second generation or third generation, is largely professionalized. And the family in business is reduced to one or two people. And as the mass of professionals increase, I think there is no option but for this to happen. I remember a very wise advisor telling me long back, ultimately the best person should lead the company, whether it is from the family or outside. And this advisor was C.K. Prahlad. He would tell a group of, I would say, predominantly family leaders whom he used to have a sitting with every year for 2 or 3 days, that your leadership should be who is the best. The question that you should ask is who is the best. Is it somebody from the family or somebody from outside? And that person then should manage it. Not all family members, because then you'll have a problem. I think this is a part of an evolutionary path. And the next 5-10 years are also going to be driven by a different set of growth parameters in India. We talked about some industries, but we didn't talk about industries that will be born out of what I call the digital super cycle. And the digital super cycle companies will provide, my guess at this point in time, is at least 1/3 of the growth going ahead. This is something entirely new. I don't think anywhere in the world that extent of momentum has been provided by companies which come out of new developments in the last 10 years. That includes everything digital and everything that leverages digital. It need not be digital, but it could be e-commerce which leverages digital at one end and pure digital play at the other end, digital fintech in between. So all these will drive it. And all these, if you see, are, the business is spawned by an entrepreneur who thinks through the whole thing and thinks through a business model and gets it going. I'm sure as they go along, it'll go the Western way, where a lot of them very quickly will need to bring in external professional management. And I think that will also be seen by, I would say, businesses which are firmly on the ground, manufacturing companies, infrastructure companies, and so on. And this will be, I would say, a very wise move as we go along, as the whole pool of professionals increases, the need for professional leadership increases, and the owners, the true owners of these companies, then decide what is the best course forward. But change will happen, that's for sure.
That's interesting. And who better than you actually knows that? Just the last 2 points given the time, Mr. Kamath. I'm borrowing this question from the previous session. Jim Rogers was there in the previous session, and I think the question which was posed to him, and it's important because there's a lot of discussion around this in India also over a period of time, gold. We all like gold, we all keep gold, and the temples and consumers and all of that. And there is a right discussion whether, given the volume and the quantum and the value of the gold, if this were to come out, this can solve a lot of our problems of funding and financing. What is your view? I know you have spent time on this, thinking about it. And
well, I'm no expert. Let me say this: Jim is an expert. I heard him talk about gold. He was espousing that one should have gold in the portfolio. I believe so. I think at this point in time, gold is everything around us is too unpredictable. We see a very strong capital market, we see growth momentum and so on, but the variables are too many in the system, and having a small part of gold in your portfolio, I could be a very wise. The question that really arises in India is at an individual level, is there a disproportionately high level of gold in the hands of individuals? And do they need to hold that? I think that is the question. And again, my view is this has been an age-old practice. Some of it is deeply ingrained. And honestly, holding of gold may not decline. Holding of other assets will increase, making that gold holding look to be appropriate size or smaller as compared to the overall holding. I think that's what will happen as ownership of diversified asset classes increases in the hands of public. Beyond that, I would think some gold in the hands is good, but too much probably is, again, you're concentrating risk in your portfolio.
Yeah, my question was more, there's a discussion around monetizing gold. So let's say temple, the gold which is lying with temple, if that gets monetized, there is that much of resources available in the country in general. And there are different schemes which were also talked about. Any view around that, Mr. Kamath?
Yeah, again, as I said, I'm no expert. I do not know how much is sentiment here and how much is this, because beyond sentiment, an institution holding gold, I can't see necessarily the merit in it. Again, their own holding pattern should be risk diversification or through asset diversification. If that is so, immediately that gold probably can be used for other purposes, and your asset classes could change. So yes, again, the sentiment aspect has to be carefully understood before proceeding on this, I would think.
I'm being pinged with number of questions and all from one range to the other, but I'm going to close with this request to you, is that we do know from the media that you participated in the discussion which happened with the leadership in the government on the budget as a pre-budget. I don't want you to share any of those discussions, but anything, your own perspective on expectations from the budget.
Sunil, I've all these years, well nigh 50 years, I've refrained from talking about the budget because I think this is a governmental exercise, and our talking about it is probably wishful thinking at best. So I have refrained from talking about it. I think we are in very able hands in terms of the team that leads us, and I would fully support the outcomes that they would place before us. I think they have done an admirable job in the last 1 year, and I look at it with the same, I would say, positive view. Clearly, what we should do is cheer them as a set 5-year goal and a 10-year goal, hopefully, and we should all strive to achieve that. And I'm sure we will, given the momentum that this pandemic has provided us, be able to achieve these heights that we aspire to.
Let me twist this and rephrase this. I'm trying to get at least you to give us some hint. There is a conversation on the media report about DFI, and no one better than you know this. You've dealt with it. Any views on that, Mr. Kamath? On DFI?
Yeah, I'm clear. The DFI can work. You see, what has happened is, again, if you look at pre-1995 or 96, and then the next 10 to 15 years and current period. Pre-95 was the DFI world, all lending for asset creation. Physical asset creation was through the DFI, not the bank, predominantly. Then came the next 15 years where it went from DFIs to the banks. And now the banks clearly are saying, hey, wait a minute, we are not the right entities to lend for an infrastructure project for 10 to 15 years. We are probably not even right for manufacturing companies for longer tenures. We will play in fields where our asset and our liability are matched. I think we can't blame them. So who funds? Who funds the requirement of? I mentioned that certain items have to be looked at even in the budget. Probably could be looked at separately. But there is a whole lot of investment happening from the private sector, and there's a whole lot of investment that could be happening even from the government. So at this point in time, a development bank, I would call it a long-term lending structure. I think absolutely a requirement. And again, before we set up the new development bank, we had the BRICS Bank, we had the similar thought. Do we require another development bank? But having looked at what is possible, I think gives me confidence to say that that's the model that is now required. With only one caveat, the bank will have to be of a sufficient size to meet aspirations. So if you see the last 20-25 minutes that we have talked about, I come back to this word aspiration, because I think the government is setting an aspiration. We have to meet those aspirations. But in a very narrow sense, when you talk of a long-term lending institution, I would think it has to be of a sufficient size, which will meet this aspirational growth.
Yeah. The critical part there would be is how do you manage the liability part?
Very simple. Very simple. Again, why did DFIs fail in 1995? Because the crutch that was given to the DFIs, that is, you were like a government SLR bond. Your bonds could be subscribed and you were survived. Once that was removed, you had a collapse. And we did not have a system whereby long-term liabilities were available through the marketplace. And the marketplace could have been people like insurance companies, pension funds, and so on. Because it didn't exist. There was only one insurance company. Today, the situation is different. So
Yeah.
today, there is a structure. So in fact, I would think that setting up this institution will be a good way to provide momentum to the bond market also. So it does two things: provides funds and becomes the channel for creating and pushing forward the bond market.
Mr. Kamath, I'm sure everyone who listens to you will agree that ET couldn't have got a better person like you than to give a perspective for the next 5 years or even beyond as to how we transition and what changes are going to happen. Thank you very much for your time. Really appreciate
Thank you, Sunil. Thank you, Beta.
Absolutely, Sunil. I really wish I could extend this. Thank you so much, Mr. Kamath. Very authoritative, very concrete views on everything that is thrown at you. It almost looks like all of it you have at your fingertips.
Absolutely.
We hope to get to. We will get to listen to you more often now. Sunil, thank you so much. You have added so much depth to the discussion. You talked about budget. The last question. I think we'll go into the budget discussion now. Thank you so much.
Thank you.
Thank you.
So this is macros now, and when it's macros, Deepak handles it best. Deepak, over to you. Hope you're there.
Thanks, Vijay. So we wanted to have a special session today on the contours of budget. Unfortunately, Swaminathan Ankleshwar Iyer could not join us live for this event. So we reached out to him in the US and he sent us this special recording. Let us first start this session with hearing Swaminathan, and then we move to the panelists who've been, we are fortunate to have them. And thank you so much, panelists, to join us. We'll soon move to the panelists. Let's first hear Swaminathan.
Nirmala Sitharaman will be presenting a new budget on February 1st. And I think this will be the first budget in history where health is perhaps the most important single issue that will concern us. There have been lots of people saying that, because of COVID, we are in this deep recession and she needs to give another big stimulus to keep the economy going. I would disagree. The biggest stimulus you can give this economy is to lift the pall of fear. People are so worried about infection that people will not go out to malls, they will not go shopping, they will not travel, they will not go on pilgrimages, they will not go out for entertainment. So we have an economy which, having been very hard hit, is on the road to recovery. The agricultural scene is pretty good, the monsoon is pretty good. Industry is picking up and has gone into positive territory. But services are more than 50% of GDP. And services are things like travel, air travel, pilgrimage, going to entertainment. All of these, I'm afraid, are still seriously negative. Why are they seriously negative? There's no shortage of supply, but people are afraid. So fear is the biggest depressant. Ending the fear will be the greatest stimulant for the economy. Therefore, the budget's immediate aim must be vaccinate as many people as quickly as possible and then have a campaign blitz to tell people it is now safe. You can start again. The vaccine rollout is taking place, but we still need to make sure. The logistics of getting to all Indians is a huge job. So it's a very major job to make sure that the vaccines, they may have been stockpiled, but they have to now reach out in refrigerated condition to each corner, every panchayat, every single area. So it needs to be done with a minimum of red tape, and it needs to be done with easy flow of funds. Nirmala Sitharaman has to make quite sure that there is no blockage of funds because they say, where is this receipt? Where is that permit? Where is this particular clearance? Where is that form? So you have to make sure there is a very rapid rollout of finance, very rapid rollout of the vaccine to get to as many people as possible. And the fact is, you don't need to get to 100% vaccination for safety. If you have no more than 70% of the population is either vaccinated or recovering from infection and therefore already has antibodies, if you get to 70% of such relative immunity, then you have what's called herd immunity. the speed of transmission of the disease goes down enormously. So instead of being highly infectious, it suddenly becomes a very mildly infectious disease, perhaps no more so than influenza. So if we can just get to that 70% level, then we can tell everybody, look, now it is as safe to go out and do things as when there was influenza. You will have to persuade people. There will have to be a campaign at every level. You will have to use every kind of audiovisual media, television, radio. Mr. Modi will have to speak to the people on Man Ki Baat. So the combination, first you have to roll it out. People have to see that everybody is getting vaccinated. That has to be then followed up by saying, now enough people have been vaccinated, go out and travel, go by air, go by train, go shopping, go for entertainment, go to theaters, go on pilgrimages, go and visit your friends. You know, we really return back to normal on the services front. So as I said, on agriculture, there is nothing that Sita Raman urgently needs to do. There is an agitation going on which a negotiation is going on, and that is a non-budget issue. But so agriculture is there, industry is recovering nicely. There is no special push that I would urge her to put. Just leave the rates pretty stable as they are. But for services, we need to recover. And for services, the most important thing is you need to end the atmosphere of fear. And if you can end that atmosphere of fear by a combination of mass vaccination and good publicity, then the services economy will revive in a big way and GDP can really soar. We have the potential to have record GDP growth of 10 to 12% in the coming year if you are able to do all these things right. So I said, the most, and if you have 10 to 12% growth of economy, can you imagine there'll be such a boom in revenues? And that will then really take care of all kinds of fiscal issues. So this then has to be the focus on COVID. Make sure that the vaccines get everywhere, make sure that fear disappears, and you will find that this is the best possible stimulus. Please do not go for a big fiscal further stimulus. Please remember what happened to Mr. Pranab Mukherjee after the 2008-9 crisis. At that time, he went for a very big fiscal stimulus, and everybody applauded and said, well done, because we need a big fiscal stimulus to get out of the recession. I mean, that is classic macroeconomics. But after that, what happened? He and subsequent finance ministers tried to get the fiscal deficit down to the target of 3%. Until today, they didn't succeed. 11 years after, they were unable to get it down. So once you let go of that thing, getting it down later really becomes very difficult. And now that we are armed with this knowledge, I think this is why Nirmala Sitharaman kept a tight lid on the fiscal deficit for the current year. Many people said, please spend much more on infrastructure, on relief, just give purchasing power to people. I will say that I was among those who also said the fiscal deficit could have been larger. You could have had more of a push. But be that as it may, that particular phase of deep distress is over. Agriculture industry have recovered. The main thing is to get fear out of the way. Now, so in these circumstances, in retrospect, the good thing is that the fiscal deficit, if it is unfudged, if there's always been a lot of fudging on what is exactly the fiscal deficit. There is a formal fiscal deficit shown, but there are two ways of evading it. One is simply by having borrowing, not directly by the government itself, but by various public sector undertakings and other subsidiary departments. And that is real borrowing, but doesn't show up as government borrowing. And the second, of course, is you delay your payments. The Food Corporation of India, I think, was owed more than 1 lakh crore rupees. Every single department owes very large sums to various suppliers. So in these ways, we have been fudging the deficit. I would say this is a golden opportunity for Nirmala Sitharaman to clean up the government books, get rid of all the fudging, and announce what is the full unfudged deficit. It may be as high as 8% of GDP, 7 to 8% of GDP, more than double the budgeted 3.5%. Never mind, say because of COVID, we went ahead and we are now going to clean up. And now that we have cleaned up, in future, we are going to have a credible budget where the figures can actually be believed by everybody. This is important for her credibility. And if you have credibility, that itself will tend to bring down interest rates and attract more foreign capital. So I said a return to credibility is required. Then if you return to credibility, what should be aiming for? I would say if the current year's fiscal deficit turns out to be 7 to 8%, for next year she can aim to bring it down by 2 percentage points to 5 to 7%. 5 to 6%, sorry, 5 to 6%. Now 5 to 6% is still a large deficit, much more than the 3% which is the target of the FRBM. But nevertheless, we need a large, it is a fall from 8%, and we need to spend money on two items on a one-off manner so that this reduces automatically the next year. The one thing we need to do it, of course, is vaccination should be provided free of charge, and all the different people whom you are asking to do the vaccination in the vaccination centers, all the people who are moving the vaccine, the refrigeration being provided, the health facilities, the nursing, all of this stuff, payment should be made easily, quickly, and massively. So as you need free vaccination for the consumer, and you need quick payment for all the suppliers in the supply chain. And this would be a substantial sum of money. I wouldn't be surprised if you add it all up together, it may go up to 100,000 crores. The second thing you have to face up to is recapitalization of the banking system. You will remember when we had the Great Recession in 2008-9, it produced what the then Chief Economic Advisor Arvind Subramanian called the twin balance sheet crisis. What did that mean? It meant that the companies in the good days had borrowed too much. And suddenly when hit by the Great Recession, they were unable to repay their loans because their debt was too much. I mean, they were unable to repay their loans on such a massive scale. That then hit the balance sheets of the banks. And therefore, banks stopped lending. So this combination of a crisis of the balance sheets of the companies, followed by a crisis in the balance sheets of the banks, produced a situation where what you might call normal liquidity and lending still has not resumed. All the all the NPAs, all the bad debts of the banks, they have not yet been taken care of, removed. All those various companies and winding up in resolution, all that resolution is still taking place. It hasn't finished. And this is 11 years after 2008-9. This recession, the COVID recession, is even bigger than the other recession. The impact of this, therefore, on the twin balance sheets is going to be even more. Even more companies are going to find that it's going to be difficult for them to repay their loans. And this in turn is going to create a problem for the banks, that our balance sheets are so bad that we won't be able to lend more. Therefore, there should be a massive provision by Nirmala Sitharaman of it, I would say maybe up to 100,000 crores in 1 year alone to recapitalize the public sector banks, enable them to clean up their books and declare that NPAs honestly, not try any more evergreening, no more pretending that the debts will be repaid. Clean that up, and then we can start lending again on a large scale on a clean slate. So these are the two things that she has to provide large sums for. The vaccination program and all the suppliers, and recapitalization of banks. These are going to be two very heavy items of spending. I think they should stand out, but they will be one-off. They will be required in the year 21-22. But after that, expenditure on them will automatically go. So you will be able to bring the fiscal deficit down from the next year. Then it can come down to 4%, and then you can glide down to 3%, which is the target. So this, I think, other areas. Well, she has been emphasizing, Prime Minister has been emphasizing, everybody has been emphasizing infrastructure. We have a situation that because of this deep recession, there is excess capacity in a lot of industry. So industries are not in a hurry to invest very massively because they say, let demand pick up first, let my excess capacity go, then I will invest again. Till then, the job of investment has to shift to the government in a big way. And Nirmala Sitharaman has said, yes, we are going to invest more in infrastructure. The problem is that if you want to invest suddenly in new infrastructure, the waiting time can be 2 years, 3 years. You have to hold public hearings, there are all kinds of plans. You have to get environmental clearance, you go to health clearance. You have to, the totality of starting a greenfield infrastructure can take 2 years, 3 years. So if you want to quickly spend money, it cannot be done by new infrastructure. The only way to have quick spending on infrastructure is a massive repair and rehabilitation program of existing infrastructure. And frankly, that itself needs a lot of repair, needs a lot of rehabilitation. Some of it can also be upgraded in the process to increase its capacity. So the focus of the infrastructure thing should be on repair, rehabilitation. I think on this it will be possible to spend a large sum of money. Next priority, privatization, for heaven's sake, finally started. We have talked about it. Last year she gave a list of 4 companies, nothing happened. Now, frankly, you cannot blame her. The COVID crisis hit. The stock markets plunged. Nobody was willing to put money out. So the markets froze. Now the markets have revived again. Now that they've revived again, those 4 companies that were up for disinvestment plus Air India, you need to get that out of the way. And she needs in the budget to make an advance announcement of at least 4 more companies to be privatized during the year, on which the privatization work, the requests, the request for inquiries must go out very, very quickly so that we can start this process and gain credibility on the process. The good thing is that the stock market has picked up. India is a favorite of the global markets. Money has been pouring in. The stock market is soaring. The IPO market is doing well. You will never have a better time to go all out on privatization. It's going to be the opposite of the COVID year. So this post-COVID year should be the year of privatization. It needs to be done in a massive way. And I hope this will set the ball rolling for subsequent years also, so that it ceases to be a kind of as though privatization is the climbing of Mount Everest. It should not be so difficult. It should be something that rolls out smoothly month after month, IPO after IPO, just as has been done for the private sector. What then should be done about the tax system? I would say the focus should be on stability. As far as the indirect taxes are concerned, most of them are already gone to GST. It is not under her control. What is under her control is the direct taxes, on the income tax, the corporate tax, and I would say stability. Please do not change anything. There are some people who will say that to relieve people, why don't you raise the tax exemption limit? The tax exemption limit in India is already several times higher than per capita GDP. Whereas in other countries, it tends to be around per capita GDP. So in India, our exemption limit is already too high. Of course, the BJP caters to the middle class, and you may say that this is the BJP's natural constituency. But please, it should not change. So I would urge no change. On the corporate tax rate, she already gave the tax break for corporates last year. There is no need to change that either. So I would say direct taxes hold steady. What about the taxes on and cesses on petrol? A very large amount was put to finance COVID. I would say you continue with it till such time as the crisis continues. But do not be in a hurry to reduce those cesses and the taxes on petrol and diesel and other petroleum products. The economy is picking up. You need the revenue. This is one revenue item which has served you well in the current financial year. I mean, there can be a small token cut, if you like, which will get a certain amount of applause. But we did need the government to mop up a lot of this windfall that we got in the fall in world oil prices, and that should, I think, continue. Then there are import duties. What should happen to import duties? Now, these have been rising and rising and rising in the last 3-4 years, to the point where India, frankly, has become an inward-looking protectionist country. Atmanirbhar, according to Mr. Modi, does not mean inward-looking protectionism. It means making India an export hub. But please, if you are going to have high taxes on imports, then you are creating a high-cost economy which cannot export. one of the great truths of economics is that a tax on imports will turn into a tax on exports because of its undesirable side effects. It raises all the costs of components, and it will create conditions where you cannot sell. Therefore, let us attempt to get the import duty, was an average of 10% of total imports, has gone up to 14. Let us try in stages to get it down towards 10. The problem is that she has already announced the scheme of production-linked incentives for a dozen sectors. It started with cell phones, and now it's going to a series of other textiles and solar panels, a large number of them. Now, production-linked incentive of 4 to 6% for 5 years. Okay, if you want to kickstart these with this kind of incentive, go ahead. But I think all of them are also going to say that, for cell phones, you gave import protection of up to 20%. So you please give us also import protection of up to 20% for all the inputs. This will be a very bad strategy, especially because some of these are not new industries. Things like textile, for instance, is there anything new about it? It's the oldest industry in the world, second oldest profession in the world, some people call textiles. So I said, we need to avoid the temptation. Already you are giving them this big incentive in the form of production-linked incentive on the output, 4 to 6%. Do not double up and then give enormous increases in import duty on all their inputs. If you do that, then I am afraid we are in danger of slipping into the same problem that we faced in the 1970s, where imports were made very difficult and very expensive in the name of import substitution, in the name of self-sufficiency. And that self-sufficiency was an economic disaster. Instead of getting fast economic growth, we got this slow 3.5%, which is called the Hindu rate of growth. So we need to avoid that. Therefore, we need to say, do not give in to the temptation of the demands of every industry for raising import duties. Say, on the other hand, let us try and improve productivity in various ways. Let us improve productivity, which has already happened up to a point through various of the incentives that you have given. But over and above that, for instance, our electricity rates are so expensive. They are among the most expensive in the world. Why? Because farmers and others got free electricity, and very, very high rates were loaded on industry as a cross subsidy. So that the formal policy now is to get rid of those cross subsidies. That is again a cross subsidy on rail freight rates to subsidize rail passengers. So all these cross subsidies increase the cost of production for export. So these are the things you need to remove, those cross subsidies. It can only be done in stages. And I hope a few stages are sketched out by Ms. Sita Raman in this particular budget. So this then should be the budget. It should not be a populist budget. It should not be something which attempts to say, I give you so much, so much, so much, so much. You can talk about spending in the right way. But the focus above all should be that this is a way of getting rid of COVID. This is a way of vaccinating the whole economy. This is the way of ending fear. And ending fear is going to be the best thing that anybody can possibly do. And therefore the budget, the finance minister and the prime minister will push all that they can behind a budget which goes towards lifting fear to re-stimulate the economy. That should be the big budget thrust.
Thanks, Swami. Those were wise words, and it's a tough act to follow, Swami. But we'll still make an attempt. Thank you so much. I'll now introduce our panelists one by one. If we can switch on their cameras and let them into the conference, please. We have with us today Pranjul Bhandari, Chief India Economist, HSBC. Ratin Roy, MD Research and Policy, ODI, a global think tank. Sangeeta Reddy, Joint MD Apollo Hospitals. And Sonal Verma, MD and Chief Economist, Nomura Holdings. Thanks a lot. We'll just wait for Ratin to join in. Thank you so much. Thanks a lot for taking time out for today's session. As I said earlier, it's a tough act to follow, Swami, but we'll still make an attempt because we have very, very wise counsel today to discuss the finer contours of the budget. Swami talked about being fiscally prudent, but that's my question. Do all of you concur with it? Should we be fiscally prudent and not profligate? Should Nirmala Sitharaman break the bank and spend as much as she can so that there is at least some level of comfort and some stimulus to the economy? If I can start with you, Sonal.
Sure. So I think the answer to that question actually depends on the growth backdrop we have going into this budget. And the reality is that India has seen a fairly fast pace of economic normalization, not recovery, but normalization so far. But similarly, it's been quite uneven, and there are still some sectors that do need support. So whether it's the more, the small and medium enterprises, or the unorganized sector workers, because there are still job issues in the rural parts of the economy, the healthcare side, which still needs support. So there are segments which need targeted support, but broadly, the economy has recovered. So we don't actually need a major fiscal stimulus this time around. What we need is actually more of a targeted support. The second point I would make is that actually there isn't that stark of a trade-off this time around, because given the growth expectations this year, our estimate is nominal GDP growth this year will be close to 17%. So the government is actually going to get a significant amount of tax buoyancy, which they will benefit from, and also a lot of the disinvestments that could not happen this year, which get pushed into next year, basically means that the revenue side is big enough for the government to spend more next year than they have this year in terms of the rate of growth, and yet show fiscal consolidation. So it's actually a good situation that we are getting into the next year.
Dr. Reddy, if I could get your views on this. Is this the time to be fiscally prudent and not be generous enough with the industry as well as with the common man?
So I would look at this in a different way, which is that we need to make sure that we spend on what is required. And the first point, which was made by Swami, being a healthcare person, I have to reiterate that the speed at which we roll out the vaccination is directly proportionate to the speed at which the economy will bounce back. So we must ensure there is adequate capital and look at the vaccination drive, not just as a health stimulus, but also as an economic stimulus. And our estimate is that this is going to take 1.5 lakh to 2 lakh crores. So whether, what proportion comes from out-of-pocket spend of customers, how much corporates figure, what the government does, let that be quickly sorted out. But the speed of this rollout is critical. I think today we crossed about 6 lakh people have been vaccinated. And now everyone is going to move from, before we used to track number of COVID positive people. Now we're going to start tracking how many have finished their vaccination. So number one is we need to spend on what is critical. And health is clearly one of those critical things. Across the board, enhanced spending in healthcare, in other social sectors, spending on and ensuring we roll out the infrastructure plan. I think that is very, very critical. Supporting other areas, yet maintaining the clever kind of control on fiscal deficit, while ensuring that the FDI, other sources of capital. So I'm looking at this from a different point of view. And that point of view is that there are certain important things to be done. Let's make sure those get done. And if we ensure that there is adequate spending on infrastructure and industry, and if there's adequate improvement in productivity with ease of doing business, digitalization, etc., this will create the stimulus which is required in terms of additional revenue for the government. So do what is critical is
Right.
really my view on that.
Thanks a lot. Ratin, if I can come to you. Sonal talked about targeted spending. Dr. Reddy has outlined healthcare as one of the areas for sure that needs support and spending. But is this act, which is a balancing act of being fiscally prudent as well as doing targeted spending, something that is an easy job done given the situation, given the COVID scenario of the last 9 months? Is that act really, really possible? You'll have to unmute yourself.
It's a real pleasure to be on a female majority panel in this line of business. It's unusual, and I'd like to, we still have some bad habits. We are badly unpunctual. The first meeting since I left India, that has actually been delayed. And then a lot came back. This is pertinent to what I'm going to say. See, this is not a very efficient country. And it's not a country that values priorities as it ought to. And nowhere is that more true than the government. So when you're talking about fine balancing acts, etc., if you just look at the fiscal record over the last 13 years, what you will see is a definite loss of control and capability in the ability to manage the budget. This is not the first year I'm going to slip on the deficit target. We've been slipping for years. And every year, some kind of, frankly, low-grade conversation takes place on we will do it next year, or we will invoke some clause, some kind of IAS officer's excuse. They remind me of excuses that school children give. The main reason we have not been able to control our fiscal deficit is we have not collected the revenues that we say we will collect, and we have not been able to disinvest to the extent we said we would. I see nothing on the table that might change that. Sonal is right. You might get revenue buoyancy, but there is a serious underlying structural problem, which is the government's revenues are, before the pandemic, far short of its expenditure commitments, which is why, as Swami said, the central government has gone into off-budget fiscal arithmetic, right? So in that circumstance, now you want to be a government to be strategic, you have a choice between living in an alternate universe and getting real. Infrastructure. Swami is absolutely right. I mean, let me put it very pithily for you. I'm from Bombay. I do not believe that Bombay Airport will open in December 2021. I don't think any citizen of Bombay believes that for half a minute. The government continues with this absurd fiction that the airport, and then like school children, we'll get excuses from September. If that culture does not change, and I think what Sangeeta said is very important, if we don't complete and finish, then we will be fiscally imprudent. Fiscal prudence in this country at the core requires spending money on time, doing it well, paying your bills on time. You cannot have a situation where the government is the largest asset holder and it wants to monetize its assets and is patently incompetent at doing so for 4 years now. You cannot have a situation where the government is the biggest defaulter in payments to the private sector. What a horrible situation it would be if we do all this vaccination and then it comes out in October that the government is in arrears to Bharat Biotech by 5 months, which, as Dr. Reddy knows perfectly well, is very commonplace for central government contracts. The other thing that we are missing here in this is that all the things that we want to do involve the state governments. And we have had simply no conversation about how they're going to be involved, what the government of India is going to do with the Finance Commission report. I think it's a great shame that the report has not been produced because the critical fiscal management task is effective spending and managing the general government deficit. And we have absolutely no idea what the government is thinking on this is. So I see a competency problem that worries me. And I also see a sort of willingness to consider an alternate universe, that process persisting. And that is particularly worrying when you have a pandemic and you're trying to recover from it. Thank you.
Thanks, Ratin, for those straight words. We respect you for that. Pranjul, Ratin has made it absolutely clear. Be responsible and fiscally prudent. But what do you think? Should COVID become the reason for the finance minister to come clean, to become fiscally clean? Or should she use that as a reason because so many countries across the globe have done a massive stimulus package? While we've announced Atmanirbhar package 1, 2, 3, 4, and I think 5 till now, but we've still kept an eye out on the fiscal deficit. Is this really the time to use this COVID as the reason to come clean the slate, as Swami has talked about? Or is this actually time to spend more and get out of this mess first? Because on the finance front or on the GDP front, this quarter, the first quarter, was the worst ever quarter that possibly India has experienced. So is this really the time to keep an eye out on fiscal deficit, or actually first make an attempt to get out of the mess and then, hey, let's be responsible once we're standing on our own feet?
Great. Okay. So firstly, thank you. And it's great to be here. So, let me just lay out the context. In the last couple of months, it seems like India has rebounded, economic activity has rebounded, despite a very small fiscal support package. Now, I think a lot of people know here that India had one of the smallest fiscal support packages around the world. And yet, we are rebounding. So some people say, look, we got away easy. We didn't have to put all that money up front and we got away easy. But if you look more carefully, in fact, if you look under the hood, I worry that what we've done is that, we've sort of left behind a scar. And this is a scar of inequality. Let me explain to you what I mean. What we've seen in the last couple of months is that large firms and high earning individuals have actually done pretty well through the pandemic. There has been a formalization of demand. People at the top of the pyramid have actually been able to save a lot of money, and all of this money that they've saved, they are now being able to spend, and that is leading to a growth rebound. So that is the good part. But the problem is that all of this money that they've been able to spend, been able to save, is going to eventually get spent. And then we're going to look around and see, oh, so what should drive growth now? And then we look at the people towards the middle and the bottom of the pyramid, and we'll find that, oh, they're not doing as well, because many of them have lost jobs through the pandemic. Some have seen big salary cuts. Some have even lost assets. And there's no real demand coming from there. So to cut a long story short, lack of fiscal spending hasn't really hurt immediate economic recovery, but it could have implications in the medium term, to the extent that people in the middle and the bottom of the pyramid have not been as well safeguarded as those at the top of the pyramid. And I think this important point that I'm trying to make should be something that should be thought about carefully in the whole budget making exercise. My sense is, don't be profligate uselessly, but don't cut back on social welfare spending. Don't cut back on a few social welfare spendings that we do, for example, Narega, perhaps even PM Kisan. I think these are going to be very, very critical. And this time we actually have a way of funding this extra spending. I think the whole formalization that we've seen, of demand is going to lead to higher tax buoyancy, as Sonal was saying. So make use of that money and continue to do social welfare spending, because if you don't, then you'll see inequality, and inequality is bad in its own right, but it's also bad in terms of growth over the medium term.
So if I read you right, Pranjul, you're saying that pain is yet to come if you're going to be very, very conservative. Till now, we've not spent a lot. We've been careful about it, but you're saying that, hey, that has left a lot of people, not benefited at all. Some of us in the middle income and the higher income group survived, but there was still a lot, and we saw the entire migration crisis for the first time. It is those people where it has hurt the most, and the pain has a lag effect in a sense. It will come and it will hit us hard if we don't do something right now. Would that be correct to assume?
Yes, I think that's correct. And just one more thing here, in the lockdown period, we saw a lot of reverse migration, people going from urban to rural. Now we are getting enough evidence that people are wanting to come back to their urban jobs. But what a lot of people are finding is that their urban jobs don't exist anymore, and they're forced to stay back in their rural villages. So to the extent we can actually continue with things like Narega is going to help in the distress, that is something that's going to sustain over the next couple of months.
In fact, I'd like to bring in Dr. Reddy here. Donning your erstwhile FICCI hat, I'm sure you would have heard enough and more tales around people at the middle of the pyramid and bottom of the pyramid that Pranjul referred to. What has been your experience and what have you been hearing? How deep is the pain there?
So clearly, I think the overall focus must be on inclusive growth. There is significant pain. And therefore, when we're planning forward, I would say this growth-oriented measures and should be primary, with fiscal consideration secondary. And in fact, what we had recommended was, besides the Manrega scheme, is to introduce now an urban Manrega, because urban poor is a very significant category of people who, we clearly saw the way they suffered. And look at it like public works, sanitation, tree plantation, further work on municipal is one category. And of course, if we can quickly accelerate some of the scenarios where we enhance rural employment is another way to look at this. I would continue to say that infrastructure spend, which is something, when I was in FICCI, and FICCI continues to push that, because it's one sector which not only generates employment and high growth, but really the projects give something like a 3.5 times return, because the downstream industry that it activates, not just cement, steel, but every other sector. So one of the highest priorities really needs to be infrastructure spending. But I completely agree with Pranjal, and I think while we talk about the U-shape and the V-shape recoveries, the real risk of a K-shape recovery with I think the government is very clearly focusing on inclusive growth, and they've been very open to all suggestions that we have made towards that. I believe low-income housing in urban areas is one area which is getting significantly focused on. Industry is one which will bring these jobs back. We just have to maintain the pace and power through this, would be my view on this discussion. I also want to add just one line before I hand back, because I think Ratin's point was very important on the states. And the National Finance Commission, actually, when we had NK Singh with us, spoke about a whole thing on federalism 3.0, that we must reimagine the way we engage with states, because the execution of a lot of these schemes lie in their hands. But I believe there's some good dialogues happening.
Thanks, Dr. Reddy. So now, on the point of infrastructure, right, that actually brings me to that next point that I wanted to understand. As an economist, you would have studied models around the world, and spending on infrastructure is something that everyone recommends, especially if you've seen a massive dip. And it rests on the government shoulders to first kickstart and spend enough on infrastructure that sort of kicks off many industries. But does that really work? Or is there an alternative model emerging to kickstart any economy in the mess that it is today for us?
So, I mean, that question actually, we can have a separate discussion altogether on that question. I mean, in terms of the models that we can look around us, if you look at the East in terms of the Asian growth model, everybody knows that it's been more export and manufacture driven, and it was sort of government hand-holded, competition driven, but it was, government handholding did play a big role. But the other two factors that were also important in terms of the Asian growth model were, one, the role of agriculture and improving agriculture productivity through actually greater smaller farming households. It wasn't large farming. And third was the role of more, financial sector in terms of directed credit to sectors which the government wanted to promote. So that was a growth model followed in Asia. But I think the challenge for India is, the world in general has become a lot more protectionist. So as much as we should target, a lot of the global value chains moving to India and exports doing well, we have to follow a broad-based growth model and strategy. I think there the answer also lies to looking to the West in terms of the role of market institutions in driving competition. When we talk about ease of doing business, infrastructure is just one subcomponent of that, the contracts, and there are so many things that come under this broad category of ease of doing business. So I think the reality is that it cannot be just infrastructure driven. It has to be a multi-pronged sectoral strategy where you're targeting agriculture, infrastructure, manufacturing, and it has to all be combined in this, what we call broad ease of doing business, but competition-driven growth model, because that is where actually the world is going. It's getting more competitive. Countries are trying to protect their turf, so we have to focus on how we become competitive. It cannot just be based on government incentives.
Ratin, if I can bring you in on this, what are your views? Does infrastructure do the trick, or is there something new that the finance minister now needs to think through? Because India could be a special case, and you can't necessarily borrow the same trick time and again.
That's not a special case. This is something we delude ourselves with all the time. I think the answer to your question is basically lies in capacity. I read two things from this exaggerated expectations from a budget. A budget is finally an accounting document. And India has one of the worst budgeting practices in the world because we don't even have a multi-year budget. Can you run a business like this? Just think. If I asked the finance minister tomorrow, if he even understood what I said, that what do you think India's tax GDP ratio is going to be in 2026? And then working back from that, I could do what Swami was suggesting, which is talk about a deficit path. But your deficit path ends up being the residual of two things. One, incompetent revenue collection and incompetent disinvestment, with the result of which you have to make expenditure cuts. And when you can't make expenditure cuts, you don't pay people's bills. And so we have entered into a very, very poor equilibrium in terms of executive action by government in the fiscal space, which is why, in fact, I've been arguing this, and I know the government doesn't like it, but they have to bear it. They did not spend money on a stimulus because I think some sensible soul in that party at the political level understood, and perhaps a bureaucracy, that they could not do it. They simply did not have the state capacity to reach out to numbers of people. So what they used was to engineer what Pranjul has not used it, but the word is a profit-led recovery, which is flush the banking system with money, create liquidity, condone default, potential default, and thou shalt survive. And that is what businesses have done. They have cut payroll, not healthcare, because healthcare is a growing industry, obviously, because of COVID. They have cut, and not just because of COVID, because of other things. They have cut payroll. They have increased profit margins. They have not undertaken investments in the future. They've made money. The economy has recovered. So that was a consequence of low state capacity. Now, if you have low state capacity, let's get one thing straight. You cannot have the government leading infrastructure. It would, as Winston Churchill said, or Mahatma Gandhi said, about Western civilization, be a very good idea for the Indian government to engage in the business of developing infrastructure. But please remember that the Indian government tried to do it for 40 years and failed miserably. That's why we had PPPs in the first place. Then they started regulating PPPs and the regulation failed. And therefore, what you have in India, I say amongst all G20 countries, is a track record in infrastructure, which is perhaps only, I think the only country that I've seen in the G20 that's worse is Indonesia. We are simply not good at doing these things. If you're not good at doing these things, we should not be spending money on it. Now, some things we're good at doing. I would argue that we've had a good COVID in spite of the government. That tells me that my healthcare sector is resilient. It is able to actually come up with a vaccine. It is able to ignore silly bureaucratic inducements. Remember that? By August 15, I want a vaccine. You must understand what that reflects. That reflects in the Delhi Sultanate, in North and South Block, an alternate universe. These guys live in an alternate universe now. They're out of touch until you get some political correction. So in those circumstances, I think we must empower our own domestic private sector, not by giving them money. I don't think that's what they're asking for. They're asking for a little bit of trust, a little bit of ease of regulation, and a little bit of ability to engage at the level at which they're most comfortable where they're located. That is, engage with state governments, engage with cities. So you could empower those entities, and the central government could then kindly manage our situation in China, our home ministry, and a few other things. I think it is very, very important for us to understand that the only way out of this mess, fiscally and otherwise, is decentralization and enabling the private sector to play a much more empowered role where they are free to be critical of things that are hindering them. Sangeeta knows very well that that is not easy with the government. They can be vindictive. So we have to stop that. And that is the only way out. Otherwise, we will continue living in an alternate universe where we aspire to be what we are not able to deliver today. And most of our conversations happen in the future tense. Let me conclude with the vaccine. I think it is excellent that we have begun vaccinating. I think it is very brave of our health leaders to take the emergency vaccine, including Bharat Biotech. But I also see now an honest conversation happening in states where they are saying that there is no take-up for the vaccine. This is something that you cannot solve sitting in North Block. You can't do it on a file. You've got to go and talk to the doctors, the sociologists, get those groups together, go into the field and come back with real-time information. That is what the government should be working on. And you will see from what I'm saying that a number of things the government needs to do are not expensive. And therefore, the question whether the government should spend more or less is misplaced. What the government needs to do is spend better and make it possible for others to spend their money in ways that deliver.
Thanks, Ratin. Pranjul, Ratin talks about fiscal prudence that has happened by force and not by choice because there wasn't enough money to spend. Obviously, the government could have borrowed, but as we saw...
No, I didn't say that. Sorry to interrupt you. I said the government did not spend because it knew that it could not spend effectively. There was no problem with money. I was the first to write that.
Okay.
We could afford it 14% fiscal deficit. But if you went to the government and said, what do you want to spend it on? They would come up with things like infrastructure. Now, Swami told you very eloquently what that means. It takes 2 years to start spending that money. They couldn't put enough money into Narega. All they could do was put money into bank accounts. They did that. Then they realized that there is no machinery. Unless you involve the state governments, politically, they don't want to do that because this is not a government that likes sharing credit. So we were left with a situation where the government chose not to expand fiscal policy because it did not have the instrumentation to execute fiscal policy. Hence, monetary policy and the RBI.
Right. So, Pranjal,
briefly, one comment just to set the record straight. I think there is a significant demand for the vaccine. Public at large are ready to take it. Doctors, I think, my father and our chairman took it front to allay any fears. And there is a significant uptake for the vaccine. So it's now just a matter of time and a little bit of time in terms of the both companies being able to roll out enough of it. So I just wanted to add that one point, that there is significant public demand for the vaccine.
People said there was very low uptake in Tamil Nadu, Punjab, and the government has set up a task force. That's why I made.
No. So in fact, on that point, Dr. Reddy, I'd like to ask, what is it that the government needs to do? Is it effective communication? Or is it the logistics part of it that they need to speed up so that it can reach out across immediately as fast as possible? Because
we are the planning in terms of phase one, where it's healthcare workers, then the public, then the public workers like the police, and then the third phase of vulnerable. The planning has been impeccable. The communication strategy is also fairly good. There's a little bit of glitches in terms of the software, and that is slowed down, and some that needs to be fixed quickly. And I'm sure they're on that job. The other is that actually production has still not completely ramped up to match the demand which it has. Here and there may be some objections to a certain type of vaccine, but I think those also, the results of those which have been given are proving that this is safe. So for me, it's a matter of, just let the next 30 days roll out and let this pace and momentum continue. Corporates are lining up, public is lining up. We just also need to quickly involve the private sector in enhancing the pace of rollout. With these few things, we're on track.
It's not available in open market, right? Because there could be a demand there, but it's highly controlled.
Yes.
And being decided by the government, obviously there will be some glitches. Understandable.
And that's the correct thing for phase one, because you're prioritizing appropriately. So phase one, there will be a demand which outstrips the supply. Hopefully by March, April, demand and supply will start matching. Then it becomes a logistics scenario of speed at which you can roll out. And I think there are enough centers ready. And hopefully by July, August, you will have more production in India than actually the demand. And we will be close to that critical mark of herd immunity and being really safe. So all things going well, that should be the scenario we should hope for and work towards together, public and private together.
Right. Pranjal, let me get you in. Swami talks about vaccinating the economy. Ratin also talked about aur koi khel nahi hai. So I'd like to understand from you, khel kya hai? How does the finance minister vaccinate the economy and get it going?
Well, look, I'll come back to the previous question that you had asked on investment and infrastructure investment and so on and so forth. I think that is really important. In fact, that's the one way in which you help both the short run and the medium term. If you invest more in infrastructure, you create these short run jobs, that are very necessary at this point. And you also create a medium term capacity of creating sustainable jobs. Infrastructure is the only way you do that. So it is very important. And I think the talk around the focus on capex capex is a good focus to have. I know it's cliched, we talk about it every year, but that doesn't make it unimportant. I think it's extremely important. The problem this time is that in an economy where there's so much of excess capacity, the private sector is not going to feel incentivized to do a lot of capex on its own, and it'll need a nudge, it'll need a push from somewhere, and public sector can play a big role. And the public sector role is not just limited to spending more. Of course, higher outlays in the capex budget will help, but there's a lot of non-financial things that can happen. For instance, you announced a PLI scheme, it's worked out for electronics, try to get it to work out for other sectors. How can the government and the private sector work together to reach those PLI targets? That can be very interesting. The second is try to improve some of the reforms you've already announced. Think about the IBC. I think this is the time when we actually need the insolvency and bankruptcy code to kick in, because that's the only way we reallocate savings in an economy where we have limited capital. Just when we need it most, we've put it in cold storage. So think about bringing it back. Think about an environment of policy certainty where you don't keep tinkering with taxes ever so often. I think these are, the wholesome focus towards increasing capex back. If we can do that correctly in this budget, some of it will be financial outlays, a lot of it will be non-financial, it'll be more reform driven. I think that will be a really good budget overall.
In fact, Sonal, let me ask you on this. Pranjal talks about the taxes. Swami himself advocates that, don't give any relief on income tax. There is enough money in the system and don't be too generous. But there are enough experts and economists equally who've talked about pushing the consumption and, inducing the demand economy. Now, how does one go about doing that if you don't cut taxes or leave some more money in the hands of the consumer?
So I think, the point that Pranjal made right at the beginning, which is that it's a K-shaped recovery, whether it's the firm or the consumers, that implies that the consumption boost, or rather the income support necessary, is more at the bottom of the pyramid. Now, maybe that happens via more rural employment kind of support schemes, which is where allocations need to happen. But as far as the other part of the consumer, pyramid is concerned, the reason we have not seen consumption is because it's been a forced saving. People cannot go out, so savings have actually gone up. And I think, if as the vaccine rollout leads to lower uncertainty, fear factor comes down, you have sufficient savings that can be deployed, and consumption can actually come back in a big way. So
if I can come in there, is there enough saving across, from bottom to middle to the top echelons, or is it just few people? A small section?
No, so exactly. The bottom is where you do need income support, and which is where your employment support schemes are necessary. But I don't think we need a broad-based consumption stimulus for the middle or the upper end of the pyramid. That segment is saving more, has enough savings to deploy once the uncertainty goes down. Now, from a more medium-term perspective, yes, you can ask, what happens beyond FY22 in terms of, are we creating enough sufficient jobs for consumption to pick up on a more durable basis? But then that's discussion on what the more medium-term sort of growth strategy should be for India. But I don't think we need a broad-based consumption boost. There's sufficient saving. Like I said, there's targeted support that is necessary for the smaller firms, for workers in the unorganized sector, but we don't need a broad-based consumption stimulus.
In fact,
Deepak, quick one or two things, sorry, but just because we have done this from FICCI, to boost consumption, I think consumption vouchers, this was rolled out for the government, but why not allow the LTC cash voucher scheme to go for all private sector? The ESI is sitting on 70,000 crores of money. Why can't we exempt payment to ESI for the next 3 to 4 months and let this be at least the employee contribution? All these will put money in the hands of people without government having to pay out real cash. So things like that, there is a series of recommendations, but consumption must be focused. Expenditure also must be focused.
Okay. Thanks a lot. In fact, we are at the ETMarkets Global Summit. And today, the markets has been a historic high of 49,700 plus. So it seems at least there are few people who have enough money to put in the market, and they have enough savings maybe to take a punt on it, which is a surprising factor. I mean, we're talking of cash dolouts, but it seems at least for the markets, there is enough cash between the institutions and individuals put together. This brings me to the last and final question. And this is where I'd like 3 key recommendations from all of you. And I'll sort of go one by one. Ratin, if I can start with you, what are your 3 key recommendations for the budget? Yeah, thanks. Yeah.
Recommendation 1, understand the fiscal situation is weak. Understand, as Sangeeta is saying and Sonal is saying, that there's no, and as Pranjul has been saying much more politely than me. But you sit in the Delhi Sultanate, you get fed up with this alternate universe. So that it is not, the competence of the central government as an instrument is limited. There are many things that you can do by just letting the private sector do them. And you should just go ahead and do them. That is recommendation 1. And she gave several examples. Just do it. I think there was an ad line about that, right? The trouble, of course, with that is you don't get credit. Now, I'm not a psychologist, but perhaps someone needs to sit with the government and explain to them that credit will come in spades if the private sector does its job to any government that allows it to. You don't have to take credit for everything. We can always put comma inaugurated by the PM, that's okay. But otherwise, general credit may not come. And that's fine. The second recommendation is, this is a great time to do what was left off in 2016. And then when our horrors began in this country with DeMon and GST, we had started off with a program of simplifying the tax system. The question is not tax cuts. Just make the tax system simpler. And this is not about, a Bhopal guy anonymously. That's about trust and corruption. And in India, we're fixated on that. This is about fewer exemptions, more people with same income levels paying the same taxes, irrespective of whether they invest in infra or in petrochemicals or in healthcare or something else. A more simplified 2-pager on corporate taxes, a GST system that actually takes a hit, but not by reducing the mean GST rate, but by having fewer rates and more simple methods of compliance. This is not going to happen in the budget, but you asked for my wish list. But I know because no one's even thinking about this. Okay. And my third would be, for God's sake, come up with a medium-term plan to monetize your assets. It is clear to every intelligent economist that this government's fiscal problem in one sentence is typical corporate problem like Mafatlal's and the old companies. Asset rich, income poor. We have textile mills in the middle of Parel, 20, 30 years ago. Their flow income is busted. So what the government's been trying to do, using a lot of rhetoric, is to monetize its assets. It has not found a way to do it effectively because it has not looked at the biggest asset it has, which is land. Land and building. If you can put that at the service of things like low-cost housing, the built environment, industry, etc., and then have an intelligent medium-term plan to divest from the ownership and control of the list of assets that you announced you would like to do in July, about which I've not heard a word till now. If you push the bureaucracy to be less lazy and not, for example, appoint a transactions professionals for LIC on 30th of November, when you've announced the privatization of LIC in the last budget. That's 8 months. You'd be sacked in a company if you took that long. So complete and finish, execute better, simplify the private sector. Don't worry about spending more or taxing less.
Thanks, Ratin. We hope your good word goes around and it reaches the finance ministry. Even if one of your wish comes true, we can proudly say you heard it first at the ETMarkets Global Summit. Coming to you, Dr. Reddy, what are your 3 key recommendations?
So one of my first ones is, of course, promote social sector spending, so health and education. I think it's critical for us to see a big push into education as well, and use this crisis, whether it's digital, e-learning, the entire spectrum, use it, innovate extensively, use the budget to encourage building, not back, don't build back, but build future. My next one is that really investment and productivity improvement can take care of areas like employment generation and therefore create the overall economic growth. So ensure that we're focusing on investment and productivity improvement. And finally, I would say I have to do one specific call out on healthcare, and that is enhance the allocation for healthcare, but also enable people to take care of their healthcare more. So whether it's ensure a health checkup, so allow exemption for health checkups. That number has not been changed for the last 15 years, I think, in terms of tax exemption for health-related spending. So look at the overall of reimbursement for medical insurance, look at the deductions for health insurance and health checkup spending. All these, so it's overall budget allocation, which should appropriately go to Ayushman Bharat, primary healthcare but allow the middle class also to be able to take care of their own health by enabling it through exemption. Thank you.
Rightly so. A focus on healthcare, and if not now, then when?
Absolutely.
Thanks so much. Pranjul, your key recommendations?
Yeah, sure. So look, one is on fiscal, that bring down the fiscal deficit, but don't do it very sharply, do it only gradually in a way that you continue to spend enough on social welfare, vaccine rollout, and all of that. But then do that responsibly through disinvestment, asset monetization, because it's now or never, given that capital markets are in record highs. The second is have a focus on CapEx. It's not just about putting more money out there, but it's also about creating the right environment, get the PLI schemes to work, bring back the IBC into play and all of that. And the third is do no harm. Don't continue to impose all of those import tariffs you've been doing for the last 3 years, because that actually comes up as a big tax on your economy. Don't maintain an environment of uncertainty when it comes to tax policies, and don't ignore the stress in banks, because that can be a huge drag on medium-term growth. So these are my three. I just also wanted to add one point to your last question. Should consumption continue to get a fillip? My sense is that if you really keep giving consumption a fillip at the cost of investment, you get a very disbalanced economy which stokes macro instability, for example, inflation, huge trade deficits, BOP problems, all the problems we have been facing. So be very careful. We have to get that balance right. So, I agree with Sonal there that, unnecessary tax consumption incentives at the cost of investment may not be the greatest idea.
Thanks. So you're putting the fear of not being excessive and being responsible in a sense. Thanks so much. Sonal, you get the last word. From the economist point of view, what are your three key recommendations?
I can just say all of the above, Deepak. But I think on a serious note, first, like I said, more targeted spending, and I would say more front-loaded spending, because the recovery is going to be more back-ended. Second, we didn't talk that much about the financial sector, but clearly that needs a focus, whether the plan is to do a good bank, bad bank, recapitalization, but extremely essential for funding our future growth. Third, I think on the competition side, the production linked incentive scheme is obviously via more incentives right now, but I think we need to now start focusing on how to make our sectors more competitive. So maybe not in the budget necessarily, but we need to do some kind of a sectoral regulatory scorecard where we benchmark sectors against global benchmarks in terms of being competitive. I think that's extremely important going forward. And finally, if you allow me, just one more, infrastructure, everybody talked about it, completely agree with that. I think the points that, Ratan was mentioning and even Swami mentioned, how do we focus better on execution, something we can monitor in terms of progress rather than just, broad allocation. I think that would bring about more transparency and more confidence that indeed durable growth recovery is probably setting in shape. So just a lot more, of course, on the agenda.
Thanks, Sonal. That's 4 people with 3 each. That's 12 recommendations for Nirmala Sitharaman. We hope she's listening, and we'll surely try to pass the word around. Thank you so much, everyone, for spending your time with us today, giving frank and opinion views. We definitely appreciate candid views, because that's what is needed and that's important. Swami started with all, and you continued the baton. Thank you so much. Thanks a lot.
Thank you. Good talking to all of you. Nice meeting you.
Yeah.
And good luck to all of us for the budget.
Absolutely. May 2021 be much, much different than what we've seen in the last year. Thanks so much. I'd like to thank also our mutual fund partner, ICICI Prudential Mutual Fund, associate partner, Stocktwits, and securities partner, IIFL Securities. Thanks a lot. And we will come again tomorrow at 3 p.m. sharp. This is a 3-day event. So don't miss out on Economic Times YouTube channel, as well as on the Economic Times homepage. You'll see us again tomorrow at 3 p.m. sharp. Thank you.